And welcome, guys. Welcome. Um, I'm not going to waste much time. I'm just going to get straight into this. So recently, I've been coming across videos of what you guys are now calling CRT. Um, and I found it very interesting how you guys are teaching something that has been put out for over an entire year, and you have now recreated it to call it CRT, candle range theory. It's very, very interesting, because I'm looking at this information and I'm thinking to myself, but this is information that we created. This is information that we put out over an entire year ago. Over an entire year ago. And recently it's popping up on the socials and all these different platforms, and people are now calling it candle range theory. And apparently they say that Romeo created it. I don't even know who this Romeo guy is, but apparently they say that Romeo created it. Other people are saying ICT created it, and I found it very interesting. I actually laughed about it. I even corrected one guy about this whole CRT. They were saying that with CRT, you're supposed to have specific candles that you use at specific key periods within the day, like time specific times, yes, where you're supposed to use it, like the 9 o'clock candle that's going to, I don't know, do what exactly, but I corrected this guy and I told him that it's all false. What he's saying is false. But anyway, what I'm here to do is I'm here to correct you guys about the CRT, supposed candlestick theory that you guys call candlestick theory. We are the ones who created it, firstly. Okay, we're the ones who created it. We put out the video. We put out the video. We put out a PDF as well. We never put out these things on social media. We didn't put them out on platforms like your YouTube and all these other places. We put out a PDF. At first, we were selling Into the Market Book One because that's what it's called. It's actually called Into the Market Book One, and we were the ones who showed people how you need to start reading price differently to what you have been taught. All right, and let's go ahead and pull out a chart right now. You guys are basically taught to look at swing structure, right? Like you look at the swing over here, you look at the swing over here, right? This one over here. You guys are taught to look at swing structure, the obvious swing structure. That's what you guys are taught to do. But what happens in between? What about what happens in between? That's what you guys are never taught to do. I was also one of those people who used to look at price that way. We took some time away from the charts for almost an entire year to figure this thing out, and eventually we figured it out. That's when we started realizing that instead of looking at all these swing structures, why aren't we looking at each and every candle respectively? Because the answer was sitting right there in front of our faces this entire time. The answer has been there right in front of our faces this entire time. Instead of us looking at all these swing structures, we decided, oh, okay, if we were to actually look at the way that the candles are printing, they're actually printing consecutively. It's either one is going to print and overlap, because it's either we're buying or selling, right? And then with secondary structure, which is what you guys call the obvious swings, you'll wait for price to break structure right here, meaning that you'll wait for price to retrace all the way and cross above this area over here, right? And then we consider that right there is what? Is a break of structure, right? But what about these candles respectively? What happens if this candle that's supposed to print lower decides to come and break this candle, right? That's the question. Is that not a break of structure? That's when we came up with the idea of why do we not look at each and every candle as structure? And that was the idea. Why do we not look at each and every candle as structure? Because now, if we treat each and every candle as structure, then ultimately, what does this mean? It means that this becomes a high, all right, and this becomes a low, right? And then we have another high over here, which then becomes a lower high, a lower low, lower high, lower low. You pretty much get the idea, right? Instead of you looking at this as a swing and say, oh yeah, that's the high, that's the low. You're basically looking at secondary structure if you're looking at these obvious swings. We were looking at each and every candle respectively as structure, a high and a low. And that's where this whole concept came from. And we called it Into the Market, book 1. Because if you do your research right now, and I'll show you, I've done the research myself. If you supposedly do your research right now of who created CRT or candle range theory, what do you find? You find that a guy named Romeo, and this is an article, Comprehensive Guide to Candle Range Theory. This is an article on the 30th of August this year. This information has been out over an entire year, and you guys are now recreating it and calling it what? Candle range theory. I find this very interesting. You look at all the dates, you'll see 12 September 2024. What else do we have? 11 November 2024. This is 3 months ago. Video created 3 months ago. What is candle range? Okay, we've got an inner circle trader ICT. With supposed tutorials, whatever. This is October 2024. 5 months ago, October 2024. 7 months ago. What is this? Yeah, 7 months ago. That's probably the oldest video I've seen that is supposedly teaching you guys about this candle range theory. It's not called candle range theory. It's originally called Into the Market. That's what it's called. I haven't done some research here on ICT candle range theory. In fact, even if we do candle range theory, I even went all the way to filters to look at the upload dates. And then mostly the longest you'll find is this year. That's the longest you'll find.
One trading.
Right? And you don't find anything more than a year ago. Why? Because we didn't put out this information. It was never on YouTube. It has always been just a PDF and a video. You can look at the
Hey
videos,
traders,
all the videos that you see of CRT. Some people have released
welcome
this
back.
3 months ago, 5 months ago. There's that one video we already saw. 7 months ago, 3 months ago, 2 months ago,
Candle
4
range
months
theory.
ago, 3 months ago, 3 months ago, 4 months ago. I'm sure all these shorts as well. Same thing. Same thing. Another person over here. Let's watch this short. What is this? Oh yeah, apparently that's what they're calling this now. And they say that CRT high, that apparently this is the high of the candle. And that's what the most important. What is that the break? Because I'm so confused by how you guys are recreating this thing, and you even still getting it wrong. Anyway, so yeah,
Well,
this is what's happening right now. This is what you guys are calling it, CRT. So let's go to the original content. And this is the original content, guys. This is the original content. Okay? This is information that has been out over an entire year ago. Okay, over an entire year ago. You can look at the dates. This isn't even when the content was created. This is when the content was actually pushed out. Okay, this is one of the content videos and books that were pushed out. This was when we had already started pushing out this information. It was this is, look at the date. Check the date. Check the date. This is March, April, May is the 5th month. This is May 21st 2023. All right, that was just one of the books that we sold at the time. So whenever you see this being created, the dates are date modified. That is basically the sales that we were making at the time, because we used to sell this content. Okay, we used to sell this content. Now it's free, and we had created a PDF as well as a video. This is the original content. I'm going to go ahead and show you the original book. We call this Enter the Market, Advanced Trading Simplified. We released 5 books. It's Into the Market Book 1, Into the Market Book 2, Into the Market Book 3, Into the Market Book 4, and Into the Market Book 5. This was to help traders understand and read charts differently in order to help them get a better edge over the market, because I see that a whole lot of you are confused about reading charts and understanding exactly how to go about your business whenever you're trading. We were taught by people who didn't even know and understand price and how to read price charts. And that's where the confusion starts, because now it's hard for you to learn something and find profitability in it from somebody who also learned it from somebody who also learned it from somebody who also learned it from somebody. Somewhere along the way, somebody is failing to understand exactly what it is that's going on. But for as long as I can remember, all of you, all of us traders, in fact, have been taught to look at secondary swing structure. That's what we've been taught. So we created this, guys. We created this. We even used the anatomy of a candlestick, the open, high, low, close, depending on how you want to look at it. But this is how we framed it, because the answer was in the way that the candles were being printed by the algorithm. That's where the answer basically was lying. The answer was lying in the way that the candles were printing. Okay, so this is the original content. Open, low, high, close. You wait for price to break and close above the high of a candle or the low of a candle. Yes, you have to include the wicks as well. You can't just look at the body closes. Yes, it's perhaps the precise level, but you have to include the wicks as well. It is very important that you include the wicks. I'm not going to go into detail about why it's important. If you would like to learn more about this information, you can find more information on Into the Market Book 2, Book 3, Book 4. And 5. Well, book 5 basically has a whole lot of other information, but you'll find a whole lot more information into market book 2, book 3, book 4, and that's just that. So this is where we broke down everything. We started showing you guys, but if you were to look at each and every candle respectively as primary structure, this is information that was out way ages ago. If you look at the timestamps, also the dates over here, you can check. This is May. This is May. This is May 2023. Okay, and this information is much older than that. So now, once you start looking at each and every candle as structure, then a whole lot starts to make sense for you specifically, because now you're looking at secondary structure as well as primary structure. You're not just involved on the end moves, you're also involved in the in between moves, because that's what actually matters. That's where you make your money. So that's what this is. It's originally called Into the Market, and looking at each and every candle respectively as primary structure, not CRT. So I don't know where you guys getting the CRT from, but then that's exactly what you guys like to do. Take something, you recreate it and make it your own, as if you created it, but that's not true. So this is where everything started to make sense for a lot of people. That was the high, and then obviously you have the low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then you have that last candle being the last one that was bearish at the time. You have this one over here breaking structure, and then we came to find that since this candle right here is actually in between the range of this high and that low, it ultimately can still cause you to lose the trade, because now you think that this candle overlapping that candle as an official break. I've seen this too many times, way too many times. You think that since this candle has been broken, then you're expecting price to just shoot up. But no, You have to have a specific reason for why price is going to be willing to continue pushing even higher. And this was a good key area to actually take a buy trade. Yes, you could have still used that candles range, but a good place for you to actually have taken the trade would have been for after price had closed above this high right there. Why? Because this candles range, right, hadn't been taken out. That low hadn't been taken out, that high hadn't been taken out. Only this candle came through, took out the high. So in this case, you technically would have taken the trade up here, but not if you are on the lower time frames. And there's something we call synchronized time frames. Okay, there's something we call synchronized time frames or aligned time frames. I'm fairly certain that none of you know what I'm talking about right now, and that's probably the best time to actually take a trade. Okay, but then again, this is just to show you that this is us who created this whole thing. So, oh, by the way, if you look at this was on the 1 hour time frame. So if you're looking at what happens when you break it down and you start moving to the lower time frames, you see that this entire candle, this one candle over here, this entire 1 hour candle over here on the 15-minute time frame is multiple candles right there. So you see that we had a secondary structure. So that one high over there equals a secondary structure on the 15-minute time frame. So it actually makes sense that you would have bought and taken your trade right after this candle closed above this secondary structure, which is that single candles high on the 1 hour time frame. Then that was initially going to be a very, very good trade for you. And yes, I actually done a live example of this. We break down everything, guys. We break down everything. We break down everything. So this is where the trades were taken. It was a sniper entry, and yeah, you pretty much get the idea. So yeah, this is what happened, and this is the original content. You can see even the dates there. I was all the way in May and stuff, but anyway, I think you guys pretty much get the idea. So stop getting confused and having people tell you that, yeah, you're supposed to enter at a 9 o'clock and candle, 1 a.m. candle, or whatever can. So don't let people confuse you. There's a way that you have to fine tune this whole thing, because the question that you need to ask yourself is, where has price been and where is price going? And where everything starts is on your weekly time frame. That's where everything starts in order for you to determine if price is actually in a continuation or a pullback. And that's going to be you who's going to have to decide if you're going to be buying or selling. That's just that, guys. We were the ones who actually taught people how to see a ranging market. And everything starts with a single candle. That's where ranging markets start. It starts with a single candle. And the simplest way to explain this to you is, if you have a candle that hasn't been broken, let me find you guys a simple one. I want you guys to let's find a ranging market firstly. Here it is. Perfect. Pay attention. Remember that we look at each and every candle individually, right? We look at each and every candle individually and we consider it as structure. Now, if price or any other candle fails to break above the high, so let me get an arrow, to break above the high of this candle or the low of that candle, then price is going to be moving sideways. And when price moves sideways and we still do not have a break, then that's what we call a ranging market. That is how ranging markets are created. That is how ranging markets begin. And we always say that even in a buying or sell, even in a ranging market, price is always moving upwards or downwards. Even in a ranging market, we're either going to move up or down. The question is, where is price initially going? There's always going to be a direction. Even if price is ranging, price is always going to be choosing a direction. Are we going up or are we going down? And that's just what you guys need to know and understand. So the idea here is to find the most important candle On every given day or in any given day, find yourself the most important candle on the chart. It's going to answer every question. But unless, of course, you know and understand what primary structure is, then you will be right where you need to be. But if you don't know what primary structure is, then unfortunately, there's nothing we can do for you. Anyway, this is just to debunk all this information about people saying this is CRT. It was never CRT. So stop lying to people and teaching them all these false things about, oh yeah, but you still need to have like 3 candles, 1 candle over here, and then 3 candles have to print and they have to break. You don't need 3 candles to break. You just need one. It's not science. And stop saying that, oh yeah, but this 1 candle has to print and then one has to take out the liquidity and then one has to go the opposite. Stop that. Just stop. Please stop. You just need 1 candle. There's nothing about liquidity on this primary structure. There's nothing about liquidity on this primary structure. It's all just primary. It's literally just you reading the candlesticks. Look at how they're printing. That's all you need to know and understand. So stop confusing people and stop confusing yourselves. For those of you who are already in the supposed CRT, if you want the original information, come through, get the information. Book 1 is free. Book 2, book 3, book 4, and book 5 is not free. But if you want the original information and to understand everything completely and fully from the people who created them, who created this whole thing, who didn't read it from anywhere else but created it, then you can come and find the information. Thank you and God bless. Ciao.